Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. OptionsGeek LLC is not a broker-dealer. OptionsGeek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Felix.
Marco, how you doing? Can you hear me all right?
I'm doing good. Not sure about the market and all, but I'm doing good.
That escalated quickly.
Man, like crazy day. I get up, I look at the market, and what do I see? I see a bunch of stocks going up. I see SPY taking a hit, like all these different things. What's going on with it?
So, yeah, I mean, look, I think, I noticed I'm watching the big shorted names. I just getting a cue from them. Obviously, the GME, that is an incredible story by itself. So you have GME. I'm looking at the Stitch Fix. I'm looking at BBBY. All of these names that have stories on the short side have, compelling bear stories, if you will. But the stocks are not cooperating, going a different direction. I think there was a tip off today on what happened. And, we can look. So the GME got stopped at around, let's call it 12. Are you looking at my screen here?
Yes.
Okay, so let's look. I can show it to you. So look, GME started taking off at about 10:15, 10:30, and this move started going from 95 to 160. A stock like this simply means what? Anytime a stock is going up, more demand than supply, right? So there's buyers here for whatever reason. So when I started seeing this move, I just thought, wow, it's starting to move. Like it's starting to move steady. Like see these bars? This is a steady buyer, and something seems to be up here. This is maybe the big move, right? So it's 5, 10, 15. And right around here, another name that I'm keenly aware of and watch is Pinterest.
Just a as well, please.
Sure.
Yeah, thanks.
Perfect. Good. You could see Pinterest was up on the day nicely, and then right around 10:15, at the same time, GME is exploding. Pinterest, I just saw the way it was starting to move down. This has to be a large seller that is just pushing this, no regard for price. I mean, there was zero regard. I mean, this Pinterest doesn't trade like this. First of all, it's a good stock. Second of all, who's selling it the way this is selling? This is to me, I just started thinking this looks like a forced seller. There's like no bid in Pinterest, and I just thought, okay, I know who's long Pinterest. So what I did was I basically clicked on Melvin Capital because I know they're getting potentially getting beat up in this GME. And I know that they're long Pinterest and they're long, 12 million, possibly 12 million, maybe more. This is from September 30th. So maybe more. They're long a lot of stock and they're long options. It's their fourth biggest position. So that made me curious to think that, is it possible that Melvin Capital is in trouble? Is it possible that they are now being told, like any risk manager, when you work at the investment banks, if the risk manager calls me up and says, Felix, I don't like this position, you get out of it right now. It doesn't matter if I like it. It doesn't matter. I'm not allowed to think. They tell me to sell it, I sell it. And I say, price, sell it. We're telling you to sell it. Can I sell it? Can I hold it? Sell it. There's no no arguments, right? There's no, but Pinterest is great. They have all these pictures and stuff. There's nothing like that. It's a very specific order, and you're told to sell it. That looked like that type of order, and it looked like in order to do that in Pinterest, you have to have millions of shares to do that. And so it just made me think that perhaps Melvin Capital is in trouble. So what I then did was I then looked at all of his positions. I went to look at all of his longs, his top 10 longs, and it was very clear that the market was down 1%, and all of his longs were down 3, 4, 5%. They were getting destroyed. Okay, so if I look at all the stocks, and I can see, I went through the top 10, 20 names, and there were 90% of them were getting killed.
Wow.
Okay, I mean, like Advanced Auto Parts was down 6%, Visa was down 5%, L Brands, Brookings, they were all getting. Bob was the only one that was up, right, out of his top like 10 maybe. Pinterest was getting destroyed. Las Vegas Sands was down. So things were just getting really beat up. And obviously top 10 names are going to, he's heavily weighted in his top 10. He has billions of dollars there. You could just count it's 3.2, 2.4. So that's 5.6, 6, 7, 8, 10, call it $10 billion in its top 12 positions. Okay. So it's big. And then I looked at his shorts, and of course you see names like GSX. I don't know if you've seen GSX lately. Let me just show you the chart of GSX in the last, call it 2 weeks. Okay. And we don't know if he's out or not, but this is what's popping up on his board. The stock just went from 47 to 115, from here. Now, he could have gotten out because he was short here, and it did go up, and then it really collapsed. So he could have gotten out maybe, but I'm just pointing out that one of the names he's short is this one. Okay. There's talk of GSX being a fraud, right? So that's one name. Obviously the GME is in there. That's a huge, let's see if it's down here. No, where is it? These are all his exits. Okay. He's 0 positions. These are all his exits. So he has GSX, he has GameStop here, 5.4 million. He's added to that as of September 30th. So that was a big. GameStop obviously was up huge. Mylan, all of these names, iRobot was up 30%. Elanco, I mean, it just destroyed. Tanga Corp, everything. His book was getting destroyed. And so I just thought, okay, this is the way it happens is, these guys, these hedge funds, they use leverage too, right? Maybe not double, but if you have let's just call it a $10 billion fund, and you use 20, 30% leverage, you could be up to 12, 13, 14 billion. If you're getting killed, if you're losing $1 billion, $2 billion on one name, GME, because you've been shorting it since 5, 10, 15, 20, and now it's 150, that looks to me, now that this GME, he was the buyer. Someone like him was the buyer, someone who was getting really beat up this morning, and JP Morgan, or whoever the broker is, Goldman Sachs, Morgan Stanley, they are not going to wait around. They are not going to give you the option. When you're putting your money, the hedge fund's money at JP Morgan, you're putting the hedge fund's money at Goldman Sachs or Morgan Stanley, they have the right, and you're using leverage, which is borrowed money, their money. They have the right to knock you out. And it looks to me like at least, maybe it's half of a position, half of the book. They don't want to knock this guy to 0 unless they have to, and they wouldn't care, right? They love you you're paying commissions, you're borrowing money, and you're a great client. But if you're about to blow up, they're not going to lose. Remember, if it goes to 0, they're not going to lose whatever you're leveraged, whatever you're borrowing, $2-3 billion. So they're not going to lose that. And so they knock someone like that out, which means what? They go sell Pinterest, they go sell all the names that are good, that look good. Now, I have a lot of respect for the people at this firm, and at Melvin, and many of the people that Melvin talks to. There's firms like Maple Lane. These are very, very smart people at these firms, and very good at what they do. They happen to get caught in a situation where you have these major short squeezes. So the lesson is that one bad position shouldn't be able to knock you out. But if you have this compelling story, that GME should not be trading at 90, 60, 50, 30, wherever, and it should be probably a $15 stock or 20 until things come together for the company and show a little bit more momentum, and that's your opinion, and you have a big short, it's unlimited what could happen. It reminds me, I would tell you this. It reminds me of a story that everyone should go. And you actually, everyone as homework should go read the story and understand what happened. The story is Volkswagen. Do you know at one time, Marco, at one time, Volkswagen was the largest company in the world. In the world, Volkswagen. Out of nowhere, it's a small auto company in the world. And how did that happen? Eventually they called it the infinity squeeze. The infinity squeeze. So I was around, it was going into late 2007, 2008. It started trickling higher. So in the middle of 2008, everybody was talking about this Volkswagen, how it was so expensive, it was going to go bankrupt, right? And they gave you every reason why Volkswagen would go bankrupt, okay? And it was a compelling story and a compelling idea. The stock wasn't going down. There was a lot of shorts, more and more shorts coming in. It wasn't going down, but the story was very, very compelling. And that the way it went from like 30 to 40 to 50 to 60, and then all of a sudden started making a little bit bigger jumps. There was a miscalculation on the short interest on shares outstanding. And everyone thought, well, the short interest isn't that high actually. And so, it's not going to be squeezed. The problem and the miscalculation was that a lot of the stock, Volkswagen is a big German company, and a lot of the stock was held by indexes, and these indexes didn't have to sell, or they just had to follow the index. So they were neither buying nor selling, they were just owning it. And even if the stock went up, it's not like they could just say, I want to sell Volkswagen, right? Because it's too high. They're tied to the index. That's how many shares they need to hold. They're not selling. So there was a lot more. There was a lot of shares out there, but there was a lot of shares locked up that weren't going to be sold. And so in the event that people are shorting this, and then something happens and they actually have to go buy it back, there's no seller. There's nobody's willing to sell. So given all that, what happened was Porsche came in to make a deal with Volkswagen. And they came in to buy, they had some deal with them. They owned a portion, and they came in to buy some other percentage of Volkswagen. I think it was like 30%, or maybe 31. It's very calculated. They bought 31%, which triggered, I guess in Germany and Europe, that if you buy more than 30% of the company, you actually have to make a bid for the company, or you have to express the interest of making a bid for the company. Wow. So as you can imagine, just that notice caused the stock to move up. So a stock that everybody thought was going to be zero, and they're shorting at 50, 60, 70, 80. Now they're shorting at 150. Now they're shorting at 250. News is coming out, and it's climbing and climbing. And the same people that were selling, wanted to sell at 60, 100, 150, 200, were trying to sell at 250 or hang in there. We're kicking and screaming, and it was the talk of the town for a while. And then in October of 2008, right before the market's about to crash, right actually when it starts to move, because the market was already jittery into September, the stock makes its final move to 900. So talking about stock, wow. It's not unlike GME, and GME just went to 150. Now imagine GME going to 900. Because it could happen. It's just, you have to always think about it. It's like a ping pong ball. It's supply and demand. It's no longer, about the story, the bear story, the bull story. Mm-hmm. None of it's valid. For Volkswagen, it wasn't valid that it was the most expensive company in the world. So the point and the lesson is that I learned from that, watching some of the smartest people in the world lose a fortune. The lesson is that things can happen. The impossible can happen. And just when you think it can, and the story is so compelling, you can't fall in love with a story, both on the bull side and on the bear side. And what only matters is risk management. Is how do you actually say, okay, this is the only amount I can lose here, and I'm okay with that. So buying puts, or, when you go selling calls because you want to be short, how many people today, with the stock opening up today in GME, you could have sold the 5-day GME 100 calls for like, I don't know, I'm going to throw it out there. I think it was probably $25, $30. And it was like, oh my God, I'd be excited to sell the stock at 130 to short it if I ever, if it got that high. It's only 5 days. The stock went from like 75 to 150, whatever we saw. I mean, this is something that, can happen. And now I guess for everyone, especially if you're new, you're seeing things that are incredible, but it should also show you that it's possible. Okay. So you want to go short calls naked or short puts naked. Just remember, it is possible that things can go 200. Why couldn't Apple go to 200? Not saying that it will, but why couldn't it? It's at the end of the day, it's this ping pong ball that can move around with supply and demand. So given all of that, we have all these names and we can look at them, but you have GME. We have, let's look at another one that was here. We can look at, I'd like to show you something here because I'd like you to remember that if you took out a big short in GME, right? I want to get this out to, let's just do 6 months here so we can. Okay. If you took GME,
wow.
Right. If you took GME and said, okay, here's a daily chart in GME and this just happened. Okay. If we took the shorts out here, some of them here on Friday, and now we've taken out most of them here. Not that we took them out. JP Morgan, their prime broker, said no mas, like you're done, white flag, you're out, like no more, right? They want their money. You could do it with your money again once we get back to your money, but our money's still on the table and we want it off the table. Okay. And they're very stern about this, by the way. Again, it's like you don't get a chance. And so they knock out the shorts here, they knock out the shorts here. Maybe there's still a lot of people betting against it now here at 75. But at some point when they knock people out, right, and it goes all the way up there, you see how fast it drops because it's supply and demand. There is no natural institutional buyer of GME at 130 or 120 or 110 who thinks this is a good price to get in because it's going to 250 on fundamentals. There is no institution doing that. Okay. Just to be clear. Okay. There are this group from perhaps Wall Street Bets that is still buying, and kudos to them. They just slayed a major hedge fund. If this is what really happened, that Melvin had to get portion of its portfolio liquidated or took on massive losses. I don't know, but that's the power of this crowd. And it's pretty impressive. And it's something that I'm not sure it's happened before, but this is pretty impressive. And they just realized, it looks like they've realized over the last few months how much power they could have. So we've been talking over the last 2 weeks about the shorts and how they've been put on notice, how hedge funds have been put on notice. If you're going to short a stock, you better be damn careful that we don't come in there and push it to wherever we want it. We talked about a million traders buying 100 shares, creating 100 million shares to buy, and you can see the havoc it creates. So go ahead.
But then again, my question is: are they allowed to do this? Right? Is this legal?
Great. So that's okay. I've been getting a lot of questions on that. A lot of people have been asking me, what are my thoughts on this? What do I think? You know what? I say, listen, if you're getting 30 people outside and you're saying, let's go buy a stock, and the stock goes up or the stock goes down, whatever happens, nobody cares, right? Nobody cares who you are. Nobody cares who the 30 people are. If it works for 30 people, then it should work for 100 million people or 2 million people. If you get 1 million people and you say, let's all go buy this stock right now, again, I don't see anything wrong with that. I don't see anything wrong with that. Okay. Now let's get to reality. Okay. Because, when there's money like this being made and lost, the SEC is on it. The SEC is going to be looking. I'm sure, I would bet a good amount of money that they're all over this. Okay. If what we just said is true, that it's a couple of people, 100 people starting, like, we're going to go right there. Let's go buy this stock right now. And then everybody goes and buys it. That's one thing. If they say, we're going to go buy this stock over here next, and people go buy it, that's one thing. If here's where there's that legality line. If someone is paying them, okay, any amount of money, and this is where they should be careful. I don't know if they're doing this. I'm not saying anything. I like to see what's happening. I love, this is a case study to me, so this is great. But from thinking it in a legal way, if someone is paying them to say, tell everyone to go over there, tell everyone to go over there, then they are promoting, they become promoters of stocks, which crosses the line unless they are telling people, I just got paid 100 grand by this hedge fund to tell everybody to go that way. They have to say that, okay? Because they become a promoter. It's advertising, promotion. Now, Some people can think that they're slick and they say, well, I know that. So now I'm going to get 500 people in Singapore, another 500 people in, India that I could just pay small amounts of money to talk up the stock. I just got to tell them, go talk up this stock, right? That's the way I'll get away with I'm not going to do anything. I'm not going to tell anybody. I'm not going to promote. I'm just going to go buy, right? So that is also would be defrauding investors, because it would be conspiracy. It's you're just because you think you stepped out because you're not actually doing the talking. You got 500 other people to do it for you. It's something that would cross the line. Okay. Now, is some of that going on at Wall Street Bets? I have no idea. Zero. Okay. I wouldn't say that. However, if I can think about it, and it seems obvious to the average investor that maybe something is not.
Sorry, Felix, your mic broke. Okay. You good?
Okay.
It's a bit messed up a little bit. Try again.
Let me see. I probably
try adjusting it. I can't hear you now at all.
No. Let's see.
Okay, now.
How about me?
Yeah.
Yeah, I can hear you.
Yeah, but it's a little bit echoey. Can you just?
Okay. So
maybe try changing the mode. Yeah.
Yeah. Let me try it over here on the mic. It's still echoey?
A little bit.
Okay, I'm gonna try to take it one stop.
Okay. While Felix is fixing his mic, I just want to thank everybody for being with us and sticking around. Comment what you think is happening in the market. It's pretty crazy out there. And if you're not subscribed, drop us a subscribe. Thanks to you, we've been growing pretty well. So we hope to keep it up like that. All right, Felix.
Can you hear me now? Better?
Yeah, it's a little bit echoey, but I can hear you.
Okay, a little bit equity. I don't know.
Echoey. Yeah.
Echoey. I'm not sure exactly why, but
I think it's fine. It's not the end of the world. Yeah.
So. Okay. So the point is that the SEC is, I'm sure, on this situation. I'm sure they're looking at it, and that's what I would be worried about. That someone is actually front running these positions, front running conspiracy, fraud. That comes into play, and some people may not even know that they're doing it, and you have to be very, very, very careful, right? Mm-hmm. Can't be paying you to talk a positive about a stock, and you can't be out there doing it and causing problems. So I think I think that you could make a case that this is great, and for the average investor to find how much power they actually have. But there's also probably an element of bad acting somewhere in this vicinity, and I'm sure the SEC is trying to look at it. So that's what I would say about today. Let's look at some of the stocks. I mean, we looked at some of the stocks last week where people were setting up in names. You picked one out. You saw one in Nokia, small stock, 5G. They're into that name today. You see smaller stocks, right? The smaller stocks are the dangerous ones, because small stocks attracts this average investor saying, I can buy 200 shares of a $4 stock. So when you look at something like AMC, 4 or 5 bucks, and people can push it, again, the story, the ability to actually act, all of that becomes important. So why don't we just look? I think I saw something today I've seen a lot of activity in this BlackBerry.
Yep.
The February, we'll take a look at the February 20 calls here. Looks like right into the volatility. You're talking about ridiculous volatility. Okay, so ridiculous volatility here. Let's see here. 373 was the high volatility. Okay, so that's a lot higher. So you could tell that there was buying here. Again, it's buying with sort of no fear about the vol, right? So when everybody's always like, oh, how can nobody care about volatility? Well, if you know the answer, and you know that BlackBerry is going to trade, a hell of a lot higher, right? It's going to trade 25 or 26, or you're short and you just want to buy these calls. Volatility doesn't necessarily matter. Okay, so people here are looking at the February 20 calls and they're paying $8.
Right.
Like that's to me is like incredible, right? They're paying. This is incredible stuff where you're taking 400 balls. So after it looks like people are buying here, the vol is shooting up. And then after the call buying is causing the stock to move higher. After the stock moves higher, we're at that 1030 mark where things started coming off or climbing, but eventually GME was halted somewhere around here. This is trailed off, come back to, I don't want to say normal, it's still 300 vol. And, it was $3, it was $5 6 weeks ago.
Wow.
8 weeks ago, and now it hit 20 today. One thing I would say, keep in mind with these things, there's a positive move and there's a negative move. The half glass full move for the shorts is, it went all the way to 160. The glass half empty is that this thing started 3 days ago at 35, right? And it could trade 35 tomorrow, because remember, if the shorts were killed, there is no buyer up here. Like we said, there's no buyer here. There's no buyer here. They didn't even want to buy it here at the institutions.
Right.
But if they're out of the game now because they had to buy it up here, who's the bid here? The bid is a million Wall Street bets people trading it back and forth. But eventually, there's more buyers. There's more people holding the stock here that eventually have to get out. So that's this game here, and I would be worried about all of them. And let's look at triple BY. Big triple BY, same thing, right? The stock was 15 days ago. Okay, traded all the way up. There's some breakout here, and in 2 days went from 25 to 48. And it's up only $1.48 after being up to $48, which is another $18. So it was up $20 almost on the day. Almost $18, $19. And now it's just trying to hang on being positive for the day. So again, it works both ways. It works on the way up, but also now there's still maybe a lot of people holding it. And I'm sure when GME, this is the one to watch, because I think when GME opens up, I'm sure the crowd is saying what? I mean, we looked at it right before. I told you what I said. I can, without even looking, I can hear the people who are long screaming, buy it, buy it, buy it, right? Buy it at, let's take a look. We went to 1 minute. Let's do it this way. When it opened up at like 77 or something, I started trading 82. And I'm saying, can't you hear from here? You can hear buy, 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 because there's a lot of people holding the stock that want to get out. After a move like this, people want to get out. So the only way to get out is if somebody's coming in to buy it, and you don't want to be the last one through the door. So it works up and down. And I suspect that all of these, we talk about the mountain.
Yep.
Right? We talk about the mountain. People understand the mountain now. Well, the mountain looks a little bit like the mountain. It might be the first mountain, but it sure as heck looks like a mountain that would like even itself out. Let's see how it holds 24, 25 before thinking of another short squeeze. But this could easily be that side of the mountain. We're now on this flip side of the mountain. Same thing with Stitch Fix. Okay. Yep. Stock was up today 10 after being up from 82 to 105 in basically a day and a half. Now it's trading negative on the day. Negative. So that means supply is outsizing the demand right now. I don't know what happens at the end of the day, but this wouldn't be a good close, especially tomorrow. You might see something like this. So it's something into the 85, 90 range. So, again, we're starting to see some of these shorts where the actual buyer at these levels, he's done. He might be done. I'm not saying he's done. He might be done. That's why the stock has gone up this much. And I'm trying to show you that a guy like Melvin probably has been cut at the knees, still alive, like the Monty Python, that whole skit, still alive, but, hey, just kind of walking around going, damn, I just got really hurt. So, again, this is what we're seeing. This is the story of today. I would tell everyone to go look at that Volkswagen story, read it, so you understand what is possible, what was transpiring. Read the people who lost money in that. There's articles. I mean, I'll Google it. Volkswagen, Google Volkswagen short squeeze 2008 here. Okay. It's a lot of stories. Short sellers make Volkswagen the world's priciest firm. Hedge funds lose $30 billion on Volkswagen Infiniti squeeze.
Wow.
$30 billion. Okay. Some of these names that they, you're talking about, how big is, let's see here. How big did GME stock get today? GME stock was 5 billion. It was 10 billion earlier today. So 5 billion went up and down in a matter of a couple of hours. You look at, that was Volkswagen was a much bigger stock to start off with. This was 4 billion. This is about 5 billion today. A couple of $1 billion there was made in loss. So if you look at all of these names, these are multi-billion-dollar stocks. 10 billion is now down 10%. So that's $1 billion that was up and down here. There's a lot going on. There's a lot of money being moved around. Look at Apple today. Apple was trading at 1.145 almost. 145 today, and so that's another call it up 5%. It's a $2.4 trillion company. You talk about 5% on 2.4, that's $120 billion. So it's a lot. It's just a lot, however you want to slice it. So there's a lot of money being made and lost. Seems like Wall Street Bets is on the winning side on a lot of these short squeezes. So,
right. Do you think something like this can backfire for these people?
Yeah, I mean, you're gonna watch GME, and people are gonna make money. Remember, you only make money if you actually sell, right? So a lot of these people, I watch the headlines and the little chat things, and it says hold, and tell everybody to hold like it's Bitcoin, and you hold from 25, you buy in at 20, 25, goes to 160, and then it ends up at 20, and you're like, okay, made no money. And what got taken out is, sure, some people did make money, and will have made money, but there will be a lot of people that, have lost it. There will be a lot of people that have tried to sell calls or sell puts against it. Or, of course, I would buy, you can sell a put today at 20 bucks. Of course, I would buy GME at $40 or $50. I'd love to buy it right there, right? And I can get paid to do that till Friday. Well, my Friday, it might be 26. Now you're down money and you're screaming at the computer and trying to figure out what happened. So there's always a flip side to these stories. And I would say the best thing that people can do is not try to sell the top, not try to buy the bottom. It's not going to happen. And don't worry about how fast the stock is moving. Just take profits as they come. And one thing, by the way, if you're trading options, here's actually a good lesson. If you're trading options in GME or whatever, any one of these crazy stocks, and the stock, what happens? The stock goes gangbusters up, right? And after, say, GME, after it goes from 80 to 100, and it goes from 100 to 120, the bid offers in the options go to like $5 at $30. Like, how do you actually trade the option? It's really hard, right? It's really hard. And so I think it's important to understand how else you can get out of that position. So if you're long calls and the stock was doing that, and you look at the market and they should be worth $50, and they're only, it's $5 at 100, and you don't know how to get out, you could always, I know professionally I could do it. So you would have to call up your broker, and you would have to ask them. I would say do it today, so just in case in the future, but you would have to ask them, if I call you up and I basically elect to exercise, and then I could sell long, you can actually sell the stock long by doing that. If you try to sell GME short at 140, 100 shares, you're not going to get the borrow from TD Ameritrade or from E-Trade or Schwab or Fidelity. You won't be allowed to short it. But what you can do, if you're long calls, you can call up the broker and you could say, I want to exercise my options, right? And that then gives you the right to actually sell GME long. You could sell it long. Okay, you would be allowed to sell. I was able to do that professionally because we're dealing with the big banks and whatnot. you know, you'd have to check your brokerage firm, and you should, just to know if that's an escape hatch, right? That is, the market's $1 at $50. How do you trade your options out? How do you sell those options? You know, you may not be able to start throwing an offer out there, but who knows? But you can also trade the stock. So if you have a one lot in GME, stock goes up $100, and the bid offer is not even existent, and you can actually call up your broker and say, I want to exercise my option, and then I want to sell 100 shares of GME. You know, you have a market order, sell the 100 shares of GME, and you get filled somewhere at 150. Then net that collapses, and you're okay. You know, it is allowed. It's a legal thing. There's a rule in the SEC. You can actually look up the SEC short exempt, and you can read it. So as long as there's a reasonable it's reasonable that you will be long the stock when it settles in a couple of days, which you are, because you just exercised the calls, then you can sell long the stock. So it's another, that, you know, most people don't know that, but it's a tool that you have just in case things go crazy. You would need money in your account to exercise, right. You know, but you know, hey, you need to know all these things when things go crazy, so that you can actually get out of positions.
Right. Okay. Yeah, that's good to know. Thanks. Cool.
Okay, so let's look at unusual. Let's look at what we do, right? So
yeah.
How about our FUTU today? FUTU.
Yes.
It hits our target, I think, 120. I mean, I don't. It's like magic, right? It just hit 120 something today.
Oh, it was at 132 at
132. Oh, even better. There you go. And we said, hey, you know what? 125, 130. I mean, this I'd be worried if it closes closer to the low over here, 100, 105. You know, remember, supply demand. Right now, it's found the level. Supply demand is keeping it here, but you know, you want to see it go negative, and then it'll drop down. So, okay. So FUTU, that was one. Nokia. So Nokia is one you mentioned. What are we seeing there?
A lot of call buying, and they've been all over it.
Wow.
I along with AMC, I think Nokia is the next one they're trying to push.
Wow. I mean, wow. Nokia and BlackBerry, right? Even though, I mean, BlackBerry's doing something different now, but Nokia. But it's like the ones that I used to trade back during the crash in 1999, 2001. Nokia and BlackBerry. Okay, so nice. I mean, what's there to say here? Nokia. So if you buy, let's just think about this. If you're buying the 5 calls for February, there is earnings on February 4th. You know, you're looking at something like $7, $8,
or
you know, so somewhere around $8, call it, you know, to make it worthwhile, right? It's a big move. Let's take a look at the momentum on the stock. You know, it's got to get through. We're going to need a much bigger screen here.
Oh yeah,
much bigger view. Let's go back 5 years. I mean, it's
not even.
Okay,
no,
not even.
More. Yeah,
you gotta go. Let's go back 20 just to see.
20.
I mean,
probably,
it's a different stock, so it's even when you go back this far at this point, it's not going to mean much. But right. You know, because this is turnover. This is basically, here was one story, and that story's dead, and now we're just playing a different story. So, you know, this is a brand new stock, traded 2.5, 5. I mean, it's 5G. That's what they're getting into. That's the story. You know, 8, 9. You're looking at 8, 9 here. This traded here in 2015 at 7.5. I mean, they could be looking at that. This is, you know, Nokia has a lot of shares though. So, you know, if you want to push Nokia, I'm sure these guys have a formula of exactly they have a formula like it's got to be a stock with such and such market capital. So this is a different game. It does 27 billion. So, you know, you got to have a lot of firepower to go up against, you know, the big guys here.
Right,
okay, so 27 billion, a billion, and you know, you can really start doing some serious damage. 27 billion. The higher you get, the harder it becomes.
Yes.
Not that it's impossible. Just the harder it becomes. Okay, so Nokia, you know, that's what they're looking at. 7, 8.
What about 9. Right? What about CCIV? Did you take a look at
CCIV?
well? Yes.
So we talked about this, you know, a couple of weeks ago, and you know, whether you buy stock or options. Look, I mean, the thing traded 27, 28. I'm not sure you're able to get out, but people are still all over the options here. The volatility is been tremendous. this took a dive here, I guess right at, I don't know why. Okay, the stock actually took a dive. Is that right? Does that happen today? Is that right data? Take a look.
It went back to like 18, 19, something like that.
Okay.
Because I actually bought 10 shares back
Oh,
in
you did?
2016, and it got to like, I don't know, 28.
And
Yeah, and I
did you
just
sell
sold.
any? Oh, you
Yeah,
did.
I did.
Oh, good for
Yeah.
you. Good for you. Okay, so yeah, so this was, wow, look at this movement. I mean, this is like incredible stuff. So it goes from 26.5 and now it trades back to 25. Incredible. I think all of these, here's something to put in perspective, because think about how much the market moved today on this. Sure, individual stocks moved a lot, but the market moved 1.5%, 2% from the highs, not even 2% from the highs. It felt like Armageddon at time, like end of days. It was like, oh my God, where's my children? I gotta hug them. The market moved 2% on not much. One person blew up, it looks like, and things started moving around and they were wacky. And there is $1 trillion, maybe, computers pushing $1 trillion against stocks. If it's a matrix, right? Everything's moving around, buys and sells, and then eventually we're getting to the point where everybody's along the same. Not everybody. All these computers along the same stocks, and if you get one computer to knock out, it causes havoc with the 5,000 other computers that they're rule-based, they're momentum versus value. Momentum's not working. Okay, trim. Well, everybody's got the same trimming rules, and everybody's got. This is what you saw today. Okay, here's another thing to think about. What you saw today is what I'm very scared about with the ARK funds. Okay, when you think about someone who is taking in the amount of money she is taking in and then having to put it to work, when that reverses, remember, it works both ways. Pushing the money in pushes the stocks higher. Okay, taking the money out pushes the stocks way lower. And so at some point, if that gets too high and people say, I want to redeem, I want to take my money out, unless they're holders like Bitcoin on that too, but usually it's not, people want to take their money off, it could cascade, because right now she's bigger than these stocks. She's has to buy 200,000 shares of a stock because, it's her new fund, and the stock may not trade that way. And now she's just buying it, and more money's being poured in because she's doing well. It's called reflexivity. George Soros, wrote a book on it, but it's basically momentum. It's you buy, it goes up. More people buy, it goes up. More people buy, it keeps going up. People see it goes by, the first person buys more, and it just creates this whirlwind for no other reason than just more people are coming in. The last person on the way out is going to feel a lot of pain, and
it's like a pyramid scheme.
Yeah, it's look. I'm not saying. I think what she has done is tremendous. She's hit the momentum market better than anyone, probably in the last 25 years. Maybe ever. And she's she stayed in some of the biggest names and rode them from nothing to very high valuations. However, at some point, you can't just take stocks and double them and triple them every year. At some point, people want to get out, and maybe there's an event. And what I'm saying to you is the event could simply be that they've tried to prevent the flash crash happening again. But the event could be all these computers sort of aligned in the same way, and they start getting out a little at a time. And when that happens, a little at a time becomes a hell of a lot. And that causes other people to panic and whatnot. And instead of having a flash crash this time, you have a 10-day sort of slow crash, because the powers that be are not letting it crash, but there's still a lot of stock to unwind. So again, things to think about. This is dangerous territory where we are. The market is trading well. I do believe that I think there's a lot of risk underneath the hood. I believe that the market wants 390. I don't know why. It just seems like it just wants 389, 390. But at any point in time, the rug could be pulled, and this could easily be down. The spice could easily be down 20 points. So you saw it today where it was down 7, and it didn't even get started. It just, it looked like somebody got knocked out. One person caused that. What happens when there's 6 people that do that?
Right.
You know, what happens is one cascades to the next. So things to think about, you know, as we're looking at this, you're right here. CCIV, what can you say? Trades for this to come back like that. It's trading great. The volume is up huge. They're buying calls. They're cornering this, you know, they're cornering, if it's Wall Street bets, they're cornering the market here, right? There shouldn't be 20,000, 30,000 options in CCIV, which is not as liquid as some of these other names, and there are. So this is causing what's called, you know, a gamma squeeze, or just the fact that everybody's got calls. The dealers, the market makers who are selling these options have to actually go in there and buy stock, but they're also long gamma. So on the reverse, when it does this, guess who's selling here, right? When they're buying to protect the calls, when it does this and then this, they have to be selling here because they don't want to just be long stock. So they get caught in this wild gamma position, and then it just sort of teeters out. But I think, you know, the good news is that maybe people are making money in this thing. The bad news is when you see stuff like this, you know, the people who make you the markets, okay, you know, you better believe if they start losing, the markets are going to be wider. The way they make their money back is when they start widening the markets and you're still trading, right? That's how they make a big chunk of their money back. So I wouldn't be surprised in some of these names, you know, that they keep the markets a little bit wider. It doesn't mean you can't make money. I'm just saying that it's no longer free, right? That, you know, dollar-wide markets, they're taking 10 cents, 20 cents. They need to make that money back. Now, nobody's crying for them, because I just saw over the weekend that Ken Griffin made $6.7 billion as a fund, $4.7 billion in free cash flow. He's making an extraordinary amount of money from trading against retail. Now, retail's maybe making money as well, and everybody's happy, but he's making it off of that flow. And that's you know, now maybe he takes a hit here and there, but the more people are trading, the more they're crossing bid offer, he's making that money. We have that Robinhood video that I would suggest people take a look at. I don't know if that's happening, but if I dreamed it up, and, you know, I believe that that's part of the story. So that Robinhood video, it's a 3-part series to get you to understand how a guy like Citadel, who just announced he made $6.7 billion, how he actually does that. You know, it's not just he's scalping a penny off of every trade. Could be, yes, you know, on most trades, but there's also a lot behind it. And he's got this massive book that he's able to see where all the bodies are. He's playing poker and able to see everybody's cards at the table.
Right.
You know, it's a pretty cool game to play. I'd love to play the game, and any big hedge fund would love to play the game. So,
yes.
What else did we see today?
Okay, we got a comment from Bharat about GOGO.
Yeah, GOGO, another one.
GOGO, yeah.
I've seen that name.
Feb 19.
All right, let's take a look. GOGO.
Yep.
So, okay, so earnings looks like estimate maybe. Okay, so they're looking at the 15s. This stock, we looked at this stock.
Well.
We still talked about this stock when it was 2 weeks ago. It was $9. It just traded 15 today. So, okay, so 15 calls. Let's take a look. I see something a little bit higher, so maybe there's spreads. A couple of spreads. Let's take a look here. See how the jump in IV here was kind of there, and then there was a jump here. So it looks like this one at 3 o'clock. I'm sorry, at 1 o'clock was potentially a buy. Potentially. Let's look at 3 o'clock. I just want to see how. With very volatile stocks, it also becomes hard to tell how they were printed, when they were printed. This looks like it's an institution, like it's a block. So that would be someone coming through with an institutional block. So it's not like it's 100 options at a time. This is a block. So at 12:56, it was 111, 111, 110, 116. It started trading up pretty quickly. So it looks like it's a buy. Okay, it looks like this is a buy. Volatility's up. The price of the options were going up with the stock. Vol is up on the day a lot. Okay, a lot. There's earnings, so you know people are playing, you know, break evens on earnings. Where can this, you know, by paying this is also pretty big here. Let's just take a look at that for a second. So this is okay. This is 10,000 at okay. So 10,000 at, you see it, 1 o'clock. Okay, so we had 4,000 or 5,000 at 1 o'clock. So what happened here? So it looks like a spread of some kind. 1 o'clock. This was, it could possibly be a 1x2, which is basically someone is buying one of the 15s, selling two. Makes sense. This makes sense to me. So I own the stock, GOGO. I own the stock at 10, for example. So let's look at the stock. I own the stock, GOGO. I bought it here last week, let's assume, or 2 weeks ago when we were talking about this right over here. We bought it at $10. Okay, make the math simple. We bought it at 10. It trades 14 today, so we're up money. And I don't want to sell. I actually think I can make some more money if it goes up. But I think at 20 bucks, I probably want to sell some of my positions. So what I can do in GOGO is I could buy the 15 calls. I buy these, okay, and I sell these somewhere. Let's call it 60 cents. So I pay $1.50. And then I sell two of these. See, I bought, let's call it 20,000 versus 40,000, say. So I pay one for $1.50 and I sell two at 60 cents. So that is how much? Two at 60 cents is $1.20.
So you're paying 30, right?
I pay 30 cents for the 50, 15, $20. This is called a 1x2 call spread. 1x2 call spread. So I do that. I do it a decent amount of times. It's called 2 million by 4 million. 20,000 by 40,000, and I'm long a couple of million shares of stock. So, we're talking about earnings comes out the next week. The most I can lose is 30 cents, but I'm actually giving up my stock at 20. That's fine. I actually bought it at 10, so I'm selling out my stock at 20. If say this thing goes to 30, right? Let's assume this goes to 30 on expiration on earnings. So the 1x2, the 15, 20 turns to $5. I paid 30 cents, okay? But I did it 1x2. So on 1x1, 30 cents turns to $5. So I make $4.70 there. On the other one, I actually I got to give up my stock at 20. So 2 million shares, and then I give up my other stock at 20. So I make 10 million on the stock, and I make 4.7. I make about 9.4 million on the options. So net, I make 20 million bucks.
Wow, not bad.
Okay. Yeah. So he's using this. He's using the high volatility, and he's using skew. See skew here, bullish. So he sees that the upside calls are very bid, right? That's what this is saying. Very bid. Okay. Volatility is not as high as it has been in GOGO, but it's still high. So he wants to take advantage of high volatility by trying to sell a little bit because he's long the stock. So I'm long the stock. I can take advantage of some skew opportunity there. I can sell those. So I pay 150, sell them at 60, and I have this 1x2. If it goes blast through 20, okay, say it goes to 30, 40, 50, I'm going to be out of that position on 2 million shares here. I make 20 million. I make what we said about 20 million bucks, 19.4 million. Okay.
Nice. Yep.
So that's how, someone who's thinking about it, who's thinking, I think it goes up, but I would let go of stock at 20 bucks for sure.
And so just my question now would be, how do we use this if we're not going to play like him? If we're just looking to buy one particular call?
Yeah, I would say, yeah, sure. I would say, I'm telling you what you're seeing, what you're thinking. Let's see the 14s. Someone's looks like they're buying these two. The 14s, say these were being bought. Let's just kind of assume they're being bought. Because why not? Okay, so it's hard to tell exactly, but it looks like because the implied volatility has gone up that I'm going to assume that they were bought. And it's gone up so much that it's definitely leading me to that. So the 14 calls are being traded here at the monies, but because of log normality, let's just throw in $18. We'll keep going up here. Call it 20 bucks. So, to buy these 14 calls 12,000 times, there's a thought of, okay, this can go up a lot. And this is where I need it to go, right around 20. So if someone is paying 14 because they think they can go to 20, that's probably the same thinking that this guy has, that it can probably go to 20. You see how both strategies are targeting 20?
Yes.
15, 20, the 1x2 is targeting 20. 1 by 2, and then this one we plug in and it's targeting 20. Say this one has a separate trade targeting 20. So that would be something where I think, okay, the powers that be, whoever's controlled this, think that it's going to $20.
Nice. Cool.
Is that fair?
Yeah, that's very
all
fair.
right. Thank you, Priya. What else? Another one?
Yeah, sure. Let's take a look. You can pick. There's Macy's. There's.
Let's talk about. How about this? Let's talk about this Palantir, because I mentioned it, and people. I think it's another interesting one. You know, I'm always looking to get short or listening to stories, but this one, you know, there was a clue. We talked about it right here last week, and we said what the thinking was, because some people sometimes they ask me like, why don't you do something, or why do you do something, or why now, or why this? Well, you know, if everybody in the world is telling me to short Palantir, right, and people call me and tell me about the story about Palantir, something that I may or may not know, and I'm listening, and I listen to everything, and I don't, you know, I don't say something is wrong or not. I just listen, and if I'm reading stories. I'm reading on Seeking Alpha, Motley Fool. I'm going on Google. I'm just trying to gauge like what's the environment saying. I'll go to Wall Street Bets and listen to what's saying. I'll go to StockTwits. I'll go to Twitter. I'll go everywhere. Like, what are people saying? And if everybody's thinking, you know, or the institutional side is thinking short, there's the clear story is that this IPO lockup is going to come up and everybody wants to sell and blah, 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 blah. And they're pointing this lower, right? This Palantir's customers are mainly to the government. And if they lose a contract, then the story's over. There's no way they should be valued here. All of that is a story. And I look at it and I go, okay, compelling. I hear what you're saying. I know that this guy's a smart guy, you know, and I'm looking at it and I say, the chart's not saying that though. Right? The chart is saying, right? Remember, the chart is all knowing. You always have to think the chart knows. It's all knowing. The chart is a brain. The chart is the psychology of the market. It knows. It's taking all that information and by the way, it's taking that information because you're playing that information, because if you think it's going down, you're shorting it. If you think it's going up, you're buying it, you know? So all that information is built in here, and this flag is telling me, you know, this is pretty rock solid here. So you know, I hear the story. I respect that the people telling me the story are smart, but the chart is telling me something different. So that's why I tell you, when you're looking at UOA, focus on the options analysis, but then make sure you kind of blank your mind, if you can, blank it for a second, and then look at what the technical analysis is saying. When they're saying two different things, I would just be careful. I would just start thinking about, you know, okay, let's go to the story now. And the story is saying two different things. You got Wall Street Bets crowd saying this is the next one, it's going to go, and it's a big Momo name. And then you got the smart institutional people saying, hey, think rationally, you know, this stock should be $15, or, you know, it IPO'd at 10, 8, 9, 10 weeks ago. So these are the types of things where, you know, it's, again, connecting the dots. And, you know, you just gotta, you gotta try to analyze the options, analyze the stock, and analyze the story separately. And then once you have sort of an idea, then you piece it all together to see if there's something real going on there that you want to take a shot with. Cool. Does that make sense?
Yes.
Okay, cool. What do you say we end it here today and get back to the watching the movie?
Oh yeah, for sure. It's an exciting one.
Yeah, no kidding. All right, good. So we'll start again tomorrow, and I'm sure, you know, I would just tell people to be careful. I would tell people for sure, watch this or go Google the Volkswagen story. You will learn something. These are things you can't teach. So you're getting a good lesson here in the market by watching it and talking about it and understanding that, yeah, you're going to hear the people that won, and you're going to hear a lot of people that won, but you're not going to hear about a lot of the people that lost. And because they're not going to be out there going, hey, I just lost half my stack, you know? So be careful. Volatility means lower positions. Don't be afraid to take something off if it's bothering you, and keep, keep thinking, you know, that it's a longer game, and the name of the game is to keep capital secure.
Cool.
All right.
All right. Thank you, Felix.
Awesome, man. All right. Be good.
Thank you, you too. And thank you, everybody else. Thanks for joining. Thanks for commenting, being here, subscribing. Also, if you want to check out our options education, 3 Steps to Profit, you have the link in the description. So after this video, go ahead, take a look at it. You're going to learn a lot. All right. Thanks, Felix.
All right. Be good. Bye.
Bye.